Welcome to the Retirement Lifestyle Show. I'm your co-host, Roshan Loungani, here with Adrian Nicholson. Adrian, great to have another episode with you today. How are you doing?
Always excited to be here on the Retirement Lifestyle Show. Thank you to all of our listeners and viewers who have joined us today, and I'm excited to talk about our topic.
Yeah, we've got a great one today. I think it's very timely with what's going on with the markets. Adrian, why don't you kick it off?
Yeah, I'd be happy to. So, our topic today is stages of a bull market. And I will start this topic off today with a quote by Sir John Templeton, who founded the Templeton Growth Fund back in 1954. And I think he has a really great quote when it comes to bull markets. He says that bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. And I know all bull markets have their own nuances and differences, but I think Templeton's quote there is very helpful template for people to analyze markets that are experiencing rising prices, which can be beneficial for investors just to understand where they're at and just to identify the certain stage they're on.
Well, and Adrian, I'm going to ask you to repeat that quote, please. I want to write down the stages he said.
Yeah,
So
I'd be
one
happy
more
to.
time.
So it's bull markets are born on pessimism, grown on skepticism, mature on optimism, and die in euphoria. So I broke it down to those four stages: pessimism, skepticism, optimism, and euphoria. And I'm just going to break down each one of those stages and talk about the different trends and different things that make them identifiable from the other ones.
Yeah, please begin. I'm very interested.
Yeah, so I'll start with the first stage, which is the pessimism stage. And this typically starts after a big downtrend in the market. And this is really characterized by negative sentiment around the market and the economy. People don't really have a positive outlook at all. Technical indicators are still very bearish. So this will be an example of certain moving averages, support and resistance levels being broken down, and just an overall negative outlook on charts. Fundamental analysts may start seeing deals though in the market. So even though you're seeing charts go down and technical levels being breached, fundamental analysts are starting to see deals where they're starting to see attractive valuations for different companies that they're looking at. And the last point on here for pessimism stage is that smart investors start to enter the market in this stage. So those are the ways that I broke down the pessimism stage. Did anything stand out there for you, Roshan?
No surprises. The fundamental analysts, finding deals and jumping in makes a lot of sense, and we do see that happening. So uh, I'm I'm eager to I'm saving my question for the end of where you think we are, and I'll share my thoughts on that as well. But yeah, no surprises here on the pessimism category.
Yeah, and I think too, just a great example too. Again, who I mentioned, John Templeton, and he's known as one of the greatest global stock pickers that the investment community has seen. One of the things he did was after the Great Depression era, he started buying stocks that were under a dollar. So he started purchasing as many as he could, and he just held on to them for the long term, and he experienced some really strong gains. And that's a strategy that he really attributed to and took advantage of in this pessimism stage where even though there was a lot of negative sentiment, bad news out there, he was saying, hey, I'm just going to try and take advantage of it and see if I can find any deals out there, any stocks under a dollar, and just hold on to the long term, see if this will be a good strategy that ultimately paid off. And that's sometimes easier said than done, just timing the markets, trying to get at a good time where you really have to look at your overall situation in your portfolio to see if that's something that you can really capitalize on, and can be difficult, but as you can see for him, it was very profitable. And that's something too, I think it's a good example to really highlight this stage.
Well, you need the capital as well, right? So in order to take advantage of that market, that the pessimism, you need to have money that you can put into it, right?
Yeah, and that's where people mention cash being a dry powder in your portfolio, where if there are pullbacks or there is a position that you have that's gone down and you think it's a good time to get back in, having that cash set aside could be very beneficial for you, other than the alternative where you might have to sell an investment or add additional capital. too, which could be take up some time. That's also something to consider as well here. So
Excellent.
I'll move us on to the next stage, which is the skepticism stage. And this is where the market is climbing the wall of worry. And this is something that's defined really as the market starting to move up in a mostly negative environment, which what we talked about before is the pessimism stage. Volatility can be typically high around this point, so that's something too that investors need to consider, where you're starting to see price swings both to the upside and to the downside. However, one big distinction between this stage and the pessimism stage is that technical trends start to look positive, where in the pessimism stage, technicals looked really bad. Again, this is where you look at a chart and it's below its moving averages, it's breaking below certain support levels, and it ultimately looks bad. Where in the skepticism stage, on a short-term basis, you might see your stock or whatever position or investment you're looking at go above some moving averages, break above some resistance level, and starting to look like it's starting to turn up. And the last characteristic of this stage that I have on my list is investors start to buy investments that start to have strong fundamentals. And we know there are a lot of fundamental different valuation indicators out there, and investors have different ones that they use to make decisions on. But this is where people are trying to start to capitalize on what we talked about in the pessimism stage, where fundamental analysts start seeing deals. You're starting to see investors actually start to act on those deals.
And actually, that's something that you and I have discussed in previous episodes, is that there weren't many deals happening just a year or two ago, and now we're seeing those deals come back, whether it's spin-offs, stock splits, acquisitions, IPOs. They're coming back, and they were dead in the water just a couple years ago, maybe even
Yeah, and
shorter.
that's definitely a good way to put it. And two indicators that I had on my list were price to earning and book value. I mean, those are some strong popular indicators that people look at. Where price to earnings is you look at where a stock price is versus the money that they're making, the profits that they have coming into the door, and you run that calculation just to see if this is a good place to purchase stock. And the other one I have on my list is price to book. What's the price of the stock compared to the balance sheet, their overall strong position where they're at right now? And those are two common indicators. But like I mentioned before, there are a lot of different indicators that people look at companies to make their decision on. But you could see here in the skepticism stage where people begin to actually start acting on it, where it's getting to a level where they say, hey, I can start making a decision here. Maybe they use a combination of fundamental and technicals where they're saying, hey, the price to book and the price to earnings are starting to get to a level that I like. And the chart is starting to look better on a short-term trend. Maybe this is a time for me to start making a decision on whether or not I should initiate a position.
Yeah, and I'm literally trying to put these into context, thinking of a time frame, right? As far as when in recent history was that pessimism stage versus the skepticism stage,
Mm-hmm.
and just looking at this and thinking, that pessimism stage has to be like late 2022, right? I'm just trying to remember back and looking at some uh, charts there, and then skepticism, that's pessimism, right? And then skepticism, where that is in 2023, I really don't know. But let's actually come back to that chart conversation at the end, and I'll let you go into the optimism stage next.
Yeah, I'd be happy to. So, like you mentioned, the next one after skepticism stage is the optimism stage. And this is where negative sentiment starts to reduce. So, people are starting to have a positive outlook on the market and the economy. And things are actually starting to pick up and starting to improve more in the economy. Volatility, like I mentioned before, which was high in the skepticism stage, is starting to reduce at this time. There's starting to begin a broader participation of investors in the market and a broader participation in stocks starting to rise in the market. And the last point I have on here is that investors are starting to justify technical trends and fundamental valuations. This could be as simple as, like I mentioned before, moving averages or breaking above certain resistance levels on charts. People are saying, hey, this is a good sign. We're headed in the right direction. Or the fundamental valuations where you're saying, this price to earning, these book values are justified, and you're starting to see it reflect more in the stock price. or there's an overall positive take right now on the market and the economy?
Interesting. As I said, I'm approaching this from the beginning of trying to figure out what stage that we're in right now. But it all directionally makes sense so far, going from pessimism to optimism.
Yeah, exactly. And I think too here one of the characteristics that I like the most in this stage is the broader participation of investors and stocks. These could be people that have been not really believing that there's been a recovery or that we're experiencing a bull market, or they say, you know what, I'm going to start maybe inching my way in or start initiating more participation, which actually fuels this bull market and starting to bring it back alive. And you're starting to not see it in a few companies. You're starting to see it across a lot of different companies that overall from the start got impacted heavily by that big downtrend in the market. And you're starting to see an overall recovery happen in the market, which fuels this bull rally.
And then euphoria.
The last stage, like you mentioned, the euphoria stage. This is where capturing positive returns, making money just becomes easy. A lot of people and investors are just thinking there are good times ahead in the economy and the markets. A lot of the negative things are in the rear mirror, and things are starting to look a lot more positive, and people think there's just good times ahead. Investors that have been on the sideline begin to enter in the marketplace. The IPO markets start to heat up a lot more, and you're just seeing an overall melt up in the marketplace where you're starting to see a broad rally happening, a lot of companies experiencing strong growth, and just an overall uptrend in the marketplace.
So, first, I'd like to ask you, with these four, where do you think we are right now?
So if we look at the market as a whole, and this is, I think, one of the most valuable things where I came researching in the topic, I was bouncing around between whether we are in the skepticism phase or the optimism phase. And ultimately, at the end of the podcast, after the end of my research, I ultimately settled on the optimism stage. But the one thing that kept throwing me off was that line that I kept mentioning on the characteristic is a broader participation of stocks. And that's something too that really hasn't been the narrative, because one of the biggest narratives has been a narrow rally. Even though you're starting to see a broadening out happening, that's something too that really had me hesitating, saying whether we're in the skepticism phase or the optimism phase. Where ultimately I settle on the optimism phase because, again, you are seeing the negative sentiment starting to reduce. Volatility right now is very low, and today is June 26, 2024. Volatility is low. The economic outlook is starting to improve. Like we mentioned before, it's not great, it's not good, but it's starting to improve, where you're seeing inflation starting to come down. The labor market's hanging in there as far as employment's not getting out of control. And you're starting to see companies still come out with good earnings. And then the last point I'll point out why I think we're on the optimism phase too is technical and fundamental levels are starting to look good. Where technical levels, if you look at the broad market as a whole, you are seeing major indexes trade near their all-time high. And fundamental valuations too, while I mentioned earnings are still good, they're still not extremely out of control, where you have to look on a case by case, sector by sector, industry by industry, because there are some very high valuations, but there are still companies too that are trading at low valuations and still aren't back to the high prices that they were back in, let's just say, the end of 2021.
Yeah. So, interesting that you say that, because I looked at this, and for me, skepticism was not even an option anymore. I think we're well beyond that. So in my mind, as you're going through this and describing it, let me actually go through some of the rationale why, and I'll just go through each of these. But with pessimism, there's no big downtrend right now. Right, the technicals aren't bearish, and people are in the market, so it's not like just smart investors are getting in it. And valuations are decent in some places, but not screaming cheap. So it's not pessimism. I don't think we're climbing a wall of worry right now with skepticism, although there are concerns in the market. Um, I don't think the environment's negative, where you said the market moves up in a negative environment, and I don't think technicals are beginning to look positive. I think they have looked positive for a while. So that's why, to me, just a couple of reasons why it wasn't skepticism. Um, Optimism, the things that I think apply, uh, Well, let me go through your list. I don't think negative sentimentism. I don't think negative sentiment is reducing right now. I believe negative sentiment's pretty much gone. Right. So then, yes, people have a positive view of the economy. I don't think volatility is starting to reduce. I think it has reduced. Right. That was a phase of optimism. Um, the broader investment participation of stocks, I was trying to find this number, but I couldn't find it while you were describing this. But we're starting to see that in 2024, right? 2023 was very much bifurcated year, magnificent seven kind of year. In 2024, I think we are seeing it get broader, even though small caps are underperforming. But I do think it's broadening, but you could argue that it's not quite where it needs to be. Investors justifying technical trends and fundamentals, I am starting to see a little bit of that, right? So that's in the optimism. Now, euphoria, capturing positive returns are easy. I don't think we're there yet. People think they're good times ahead. Uh, I don't think we're there yet either, right? I would say negative sentiment has reduced, as you said, in the optimism phase. But to me, people think good times are ahead and all negative things are in the rear view. That's what you had said in the euphoria stage. I don't think that's accurate. I think people still have concerns about inflation, about Fed rate cuts. Um, Cash coming off the sidelines is an interesting one because if I had, that's a euphoria trait. I don't think cash has come off the sidelines. I think we're starting to see that. IPOs heat up and melt up in the market are the other euphoria stages that I don't quite think we have yet. So this is not scientific at all. But to me, I see one characteristic of the euphoria stage you described that we might be experiencing, which I think may be at the earlier stage. That's the cash coming off the sidelines. And then on the optimism side, though, I see three that stand out that where you've got broader investment participation, investors justifying technical and fundamental trends. For everyone listening, this is obviously not a science. This is part of the art of investing. These are opinions. Please consult with your investment advisor. Reach out to us if you need help. We'd be happy to help you out. We're just trying to figure out what stage we're in ourselves. But I actually, what's interesting to me is I think we have agreed. Tell me if I'm not putting words in your mouth, Adrian, but we've agreed that we're in the optimism stage, correct?
Yeah, I definitely agree we're in the optimism stage. And I guess the only reason why I kept going back to the skepticism phase was just that first one that I described, climbing the wall of worry. And I feel that that's something that really never goes away when it comes to markets or the economy because there's always something to worry about
Something to worry
here.
about. Yeah.
So that's the one thing I'll add. And I guess the other thing I'll add too is just the euphoria phase, whether or not we will actually get to that. Because to me, when I was talking about those characteristics, it just seems a little too good to be true, where money making would be very easy. There's only good times ahead with the market and the economy, which means there's nothing to worry about, which I just talked about. Doesn't seem like that's the case with the market.
Yeah.
And then the IPO market coming back too, that's just something too where, will we get back to those 2019 levels? I'm not sure. That's really tough to see. I think that's also driven by rates and just an overall melt up in the market. Would I like us to get there? Of course. Could we get there? It just seems unlikely where you just got to enjoy the optimism phase as long as it lasts.
Yeah, and what you talked about with climbing the wall of worry, with skepticism, that. So what I found that I cannot disagree with you. That, like you said, there are definitely always things to worry about, particularly with what's going on right now. What I found interesting is we came through it to our optimism conclusion directionally different. Because to me, it's like, all right, we're not at pessimism, we're not at skepticism, we're either optimism or euphoria, and sort of worked my way back from, okay, it's not euphoria, it's optimism, where you sort of worked your way up the trend on here, saying we could be in skepticism or optimism, and then you ended up going with the optimism phase. Now, for everyone listening, I would not make any investment decisions based on this alone. Do your research, do your homework, as I gave in our disclosure that I always share, to talk to your advisor and do your own homework. But I look at this as just additional data points when making a decision. So I don't think you can make a decision about anything with this information alone. I think you've got to take this information and use that to enhance your other research and analysis.
Yeah, I definitely agree too. And I think the most valuable thing, it really does provide a backdrop too, because when I really did just research this topic and was planning for our podcast today, I really just said the market as a whole, looking at just the major indexes, the Dow, the S&P, and the Nasdaq, where, as we know, bull markets can just be very small and happen in different pockets or sectors or industries or just like themes or trends, whatever they are. Where having this as a backdrop can really help you and guide you and see, hey, where are we at right now? Because if you are in a certain sector or industry that's experiencing a very strong bull market and you're seeing a lot of stuff that makes it feel like you're in the euphoria stage, that might make you look at your overall position and say, hey, do I need to make any changes or anything else right now? And is this justified? Do I need to make any changes along the way? Where identifying certain characteristics and behaviors in whatever market or industry you're in can sometimes be very vital.
Yeah, and I think of, just when you talk about that euphoria stage, right? Making money's easy, and the cash coming off the sidelines. Like, I anecdotally remember, right before things went down, my niece and her college friends talking about uh, trading and to make money in the markets. I'm not really hearing any of that. I'm hearing from clients as well about just ways to make more. Now, interestingly, I'm hearing talk of Nvidia, from people, but not about the markets as a whole, or hearing people just saying. I remember, and I shared this on a podcast, that I spoke to a client, or a potential client, that I never started working with. This was towards, right before things crashed, and they were like, "We want to make a 10 to 15%." They said, "We don't want anything that's that risky. We only want to make 10 to 15% a year without many ups and downs." And it's
Hard to do.
because, yeah, well, and it's their lack of experience, right? They had just seen a market that it was easy money to be made, as the euphoria stage describes. So to them, making only 10 to 15% had to be easy. And if you're only trying to make 10 to 15%, you could make it with low volatility. Where what they were looking at were things like Bitcoin going up 300%, at the time, or the meme stocks, or stuff like that. So uh, I have not spoken to them since that one conversation, but I do wonder what they're doing now, investing wise, as we talk about it, because they might be my gauge on are we in euphoria.
Yeah, and I think I guess a big distinction I would say. Well, there's a lot of big distinctions between the euphoria and pessimism stage, as I just lined out. But when I think of the euphoria stage, I think of the upside risk, and when I think of the pessimism stage, I think of downside risk. And the reason why I'm drawing on that is, where you think about pessimism, it's coming off of a big downtrend, or the biggest worry is, could you go down more? So you're thinking more about the downside risk. And ultimately, if you just think about it, just markets in general, you want to capitalize when you think the market's bottoming out, which is hard to do, but that's where you got to go hunting for those deals, see if there's any adjustments you need to make. And that's just the downside risk you're trying to mitigate. Where the euphoria stage is the upside risk, where if you talk about a rapid price increase or a melt up, the upside risk is something you really need to consider, because just as fast as things go up, they can come down just as far, because that's when volatility can pick up. So that's also something too that you really need to consider depending on where you're at.
Yeah, and that's where the we talk about risk, and you'll always hear me say that uh, risk is the possibility of losing capital,
Yeah.
whereas the academic answer is risk is volatility. And volatility goes both ways, up and down, right? So even if you have too much of an extreme upside, there could potentially be a reversion to the mean.
Yeah. Ultimately, yeah. That's just a good point too. And I guess the other thing I would add on here is how significant bull markets can really distort your portfolio in a way where maybe how we talked about the narrow rally, you do have positions or investments that are just very big compared to what they were at the beginning before this uptrend increased as well. So this is also something too that you have to consider, whether you're still willing to keep it, resize, rebalance, whatever it may be. I think that's also something too that you can draw a lot of value if you think you're experiencing this bull market, and depending on whatever stage you are, that's also something too that you have to look at as well.
Yeah, and where I think these stages are valuable and important is when you consider what you're going to do with the portfolio going forward,
Mm-hmm.
right? Because if you're in the euphoria stage, do you become more cautious because you're expecting that to go to pessimism, whereas if you're in the skepticism phase, you go more aggressive if you believe you're there because you think that optimism is next. I think it's also worth noting that there isn't sort of any fixed time frame for any of these, and I do think it's possible. I don't have any data behind this. I'm just thinking this through as we discuss it, Adrian. But I do think it's possible to move backwards, right? Like just think about this for a second. Let's just say we're right and we're in the optimism stage right now. If tomorrow we get bad inflation numbers and the Fed start raising rates, don't you think things could fall backwards to, there is a wall of worry now, the market, I guess this says the market's moving up in a negative environment. So maybe you'd have to go back 2 stages, right, to pessimism. But I do think you can move. It doesn't have to be a direct line, which is also why earlier I said I don't think you make any decisions on your investments based on this information alone.
Yeah, I definitely agree with that. As we know now, especially, markets are just very sensitive on what the Fed does. And as we know, markets are always ever changing. What you decide today could really change tomorrow. But ultimately, just seeing where you're at, seeing what works for you, seeing if you need to make any adjustments is really important, and why you really need to focus on where you're at and where you're going, to, especially when it comes to your investments, your overall plan.
Adrian, this was a wonderful topic. I'm glad we covered it. I'm glad you selected this and chose to go over it. Do you have anything to add with the stages or anything else you found in your research?
Yeah, no, that's pretty much it. I just really enjoyed that quote again. I'll just go over: bull markets are born on pessimism, grown on skepticism, mature on optimism, and die in euphoria. I think it's just a really great quote by John Templeton. And I think he really just outlines this quote on just how like a human is, because they born, they grow, they mature, and they ultimately die. And that's something too you really have to look at, whether it's just an individual position, a market, or your portfolio. Just think about it as just how that different levels and different stages that it goes through, and just identifying and understand that what stage you're in can be very beneficial and help your decision making. Even if it's one data point, it's better than no data points.
Yeah, and just with Templeton, for those of you who don't know him, he ran the Templeton Growth Fund, which averaged 15% a year for 38 years. So definitely a smart investor, one of the greats, and very knowledgeable in the space. So, Adrian, once again, great topic. I really enjoyed it. Thank you for everyone for listening. This has been another episode of the Retirement Lifestyle Show. Please like, subscribe, give us 5 stars, take control, and achieve your goals.
Schedule a conversation with Roshan, Adrian, or Eric today at retirementlifestyleshow.com. Roshan and Eric are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither Arete Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of Arete Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through Arete Wealth Advisors, LLC, an SEC-registered investment advisor. and securities through Arete Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw and Audionautics. It's part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.